afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The ECB left policy unchanged this morning in the President Mario Draghi's last meeting. It also came on the heels of disappointing flash PMI data, Germany as well as Eurozone below expectations. And this is exactly why the ECB left policy accommodative for the foreseeable future. They plan on reinvesting principal payments on expiring securities. Overall, no surprises. The euro down slightly. The dollar index, dollar overall, just up just a bit. Not really any better data coming out of the U.S. either. We saw flash PMIs. The manufacturing just a bit better than expected. The composite number worse. Durable goods was really the number that was looking at this morning that came in slipping sharper than expected. The global numbers, this global growth around is deteriorating. We're not seeing much of a better picture here over the past 2 weeks after just a slightly better picture through the second half of September. So tomorrow we look to German IFO business climate and as well final Michigan October consumer data. So we'll see how things finish out the week, but overall we're seeing the dollar index trying to buoy at that 97 level. Definitely some resistance 97.80. If you are a dollar bear, that's where you want to look to be a seller. First test up to 97.80. For the euro, we've been bearish to the euro. This was a tough week, even though the euro was in an area at 112 coming into the week that we wanted to fade it. It was a tough week going into the weekend with uncertainty around Brexit, and then to get a position on and go short at that point, you're riding that into uncertainty of the Brexit over the weekend, and then you don't want to be in a loser heading into the ECB. So it really wasn't timing-wise on the calendar a good time to sell the euro, but it has panned out, even though we didn't do it. Where support comes in, 111.20 area, that's a trend line that is now going to be support as well as the 50-day moving average area. So look at that, but if you're bullish the euro, that's where you may want to be a buyer. For us, we're looking for a rally to fade. And then look at the yen. Now, the yen did not respond today with gold. Gold was up nearly 10 bucks. The treasuries, they held ground, arguably, but the yen hasn't done anything all week. It broke through support, and that previous support that we broke down through 92.70 area now is going to be strong resistance, and it has been a strong ceiling the yen has not been able to chew through. And we talked about it. We start closing below 92.5. It's going to paint a path least resistance down to 91, and that's what's developing here unless you get a much weaker dollar or you get a stock market that rolls over. It's hard to imagine the yen getting any sort of life outside of that for either of those two reasons. There could be a number of reasons that make one of those two happen as well. But manufacturing data of Japan last night also contracted worse than expected. So again, deteriorating global growth. And you're seeing the Aussie dollar respond to those numbers as well today. It slipped shortly after the U.S. Stock market opened, and the market pulled off from the highs of the stock market, but the Aussie slipped pretty sharply. For us, we have a couple trade signals. We're looking at 68.30 as a buy into support as well, down to about 68.10. But this is a low risk trade. You're looking at a stop about 67.90 area. So keep a tight leash on that, but we are seeing a little bit of a buying opportunity there for now. If you do take that trade, make sure you contact us and stay with us, because we may scratch it too. So that's something that is a moving piece right now. So make sure you contact us if you take that trade. You're not going to get an update from the FX Rundown tomorrow. So remember that. And then for the Canadian dollar, we do have a option strategy with the Canadian dollar. We've had this on for about a month and a half to almost 2 months now. We are short the $76 December call for every 3 77 calls we are long. This is playing out. We were down on it for a while. It's starting to play out a little better. It's in our trade alert strategy. Again, contact us. We're happy to talk more about it with you. We're getting to where we may have to get out of it on a time frame basis. We have a couple more weeks. Now, there's a lot of resistance at 77, just below 77, previous peak. Keep an eye on that. If you're trading futures, we do think the momentum can get out above there. That's what we're looking for right now. Crude oil has had a nice move this week. That's also lifted the Canadian dollar despite poor retail sales, poor wholesale inventory data as well from Canada, but you're seeing some hope behind the USMCA. You're seeing hope as well as the energy sector has had a great week. But give us a call. We're here to help with, again, with anything on the board with this trade signals. Talk about the Aussie, the trade alerts, which is an option strategy. We're in the Canadian. And then we're doing things at the desk here in the euro and the yen on a daily basis. Give us a call. We're here, 312-278-0500. And you can check out our website, bluelinefutures.com. We put updates out there on the research page. Contact us, info@bluelinefutures.com. Email us there. Again, info@bluelinefutures.com. But remember, futures trading is not for all investors. It involves substantial loss of risk. And please contact us with any questions. Thank you very much.